Hi, I'm Jeff Hirsch. I'm here live at the Money Show in Orlando with Jack Ablin of Crescent Advisors. He's the founding partner and the chief investment officer. And where are we going to invest now? Where are you guys seeing the places to be?
Sure. So, we did get a little bit of a pullback in December, got some bounce back again. What it amounts to is, there are really five things I look at. Valuation, is the market rich or cheap? Right now, the market's fairly priced. In fact, if you look at foreign markets, emerging markets, you could say it's cheap. The economic backdrop, well, the economic
Uncertain?
backdrop here is okay, but maybe uncertain abroad. Things are slowing, but maybe we're not going to fall off a cliff. We also think China is going to likely just throw everything at their economy to keep things going. So we're
You
not.
see a deal there in China?
No, in fact, I think that we're going to see permanent tariffs. I've told our manufacturing clients who have dealing with tariffs that no, this is not a tactic, this is not a strategy, this is a new policy, and I think this is going to be with us for a while. So
That's
something
negative for the market.
That would be negative for U.S., but I think that it creates an opportunity for China to really stimulate, and they will likely do that.
Okay, so economic
backdrop uncertainty.
Liquidity, yep.
is negative. One of the things I look at overall is, are lenders tripping over themselves to put money to work, or are they starting to rein in? Unfortunately, Jeff, they're starting to rein in.
Yep.
And they started to rein in a year in 2007, one full year before we saw any hint of a recession or problems in the financial crisis. So that's an early warning indicator we got to watch. Psychology is an interesting one. It really is only effective at extremes. And I'll tell you, when we got to the end of 2018, it was extreme. We had a widespread bearishness that we haven't seen since the financial crisis.
I saw it in the internals, the put-call ratios, very negative.
That's it, yep. That, the stock trader's almanac, go get it. If you don't have it, you need it. But overdone, clearly.
Yep.
And then momentum. A market in motion tends to stay in motion unless otherwise acted upon. We did break momentum in the first week of October, and that was a negative, and it's still negative today. So all in all, we are slightly underweight equities overall. Our largest weights relative to our benchmarks is in U.S. small cap. We
had a banner January, the Russell 2000.
And here we think that the U.S. market is pretty insulated from the rest of the world, and if we don't expect a trade deal to occur, that's going to hurt the large caps. It likely keeps the small caps okay.
That's right.
And then we're waiting. We're underweighted in emerging, and we want to really put on a position there. So I think
small caps and adding to emerging,
and looking to
and a little underweight large caps because of China.
Yeah, exactly. So we think that the China deal is going to be a disappointment, and slowly investors are going to recognize that this is long-term policy. This is not something that will likely be reversed.
Yep.
Great.
Thanks, Jack.
Thank you, Jeff.
Thanks, everybody.